Ladies and gentlemen, good day and welcome to the Q3 and 9M FY23 results conference call of Heranba Industries Limited, hosted by Emkay Global Financial Services. We have with us today Mr. Raghuram K. Shetty, Managing Director, Mr. Ronak R. Shetty, Executive Director, and Mr. Rajkumar Bafna, Chief Financial Officer. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions at the end of today's presentation. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Rohan Ori from Emkay Global Financial Services. Thank you, and over to you, sir.
Thank you, Lizanne. Good afternoon, everyone. I would like to welcome the management and thank them for this opportunity. I shall now hand over the call to the management for the opening remarks. Over to you, gentlemen.
Good afternoon, everybody. Thank you, everyone, for taking your valuable time for Heranba's Q3 and 9 months FY23 earnings call. The company's 9 months FY23 revenues stood at 10,655 million, impacted by challenging global macros, including prolonged geopolitical concerns, rising inflation in major economies, and slowdown in demand. The domestic technical business witnessed lower demand due to challenging market conditions coupled with higher inventory. Our export business was impacted by volatile global macroeconomics. The EBITDA margins were suppressed during 9 months FY23 due to higher raw material prices and an increase in power and fuel costs. Heranba's capex plans are progressing as planned, and it will further strengthen the company's capacities and capabilities for the coming years. Heranba aims to leverage its sales and marketing teams reach to strengthen its relationships with existing customers along with adding new customers. The near-term outlook is challenging for the entire agrochemical industry. However, Heranba will continue to diversify its product portfolio, widen its distribution network, and sharpen its R&D focus for creating sustainable growth. The company is well poised to build on the strong operational competencies developed over the last few years. I am hopeful the company will continue to grow and surpass new milestones in the coming years. We look FY23 as transitionary year for Heranba and are optimistic of the future. I will now hand over to Mr. Raj Bafna, our CFO, to take you through the financials. Thank you.
Thank you, sir. Good evening, everyone. I would like to brief touch upon the key performance highlights for the third quarter ended 31st December 2023. And then we'll open the floor for question and answer. Now moving towards financial highlights for quarter ended 31st December 2022. Revenue from operation stood at rupees 2,802 million in quarter 3 FY23 as compared to 3,954 million in quarter 3 FY22. EBITDA stood at 264 million during the quarter with EBITDA margin at 9.41% in quarter 3 FY23. PAT stood at 144 million in quarter 3 FY23 as compared to 535 million in quarter 3 FY22. The company's domestic to export mix stood at 49:51 in quarter 3 FY23 as against 65:35 in quarter 3 FY22. The sector fundamentals remain challenging for the short term. However, it continues to remain strong for a long-term basis. That concludes the update on financials. Now we can open the floor for question and answer.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star and one on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Bhavya Gandhi from Dalal and Broacha Stock Broking. Please go ahead.
Yeah, thank you for the opportunity. A couple of questions, sir. First question with respect to CapEx. What is the CapEx figure for 9 months? Because I see there is no incremental depreciation charge in the current quarter. If you could just share the CapEx number for 9 months.
For 9 months, we have done CapEx around 60 odd crores. Okay. For the depreciation, it's not done because all is the WIP. That is the reason for the not depreciation charge.
Okay. So 60 crores, our annual guidance is around 150 odd crores. So in the last quarter, are we expecting?
Last quarter will be done around 50 to 60 crores good CapEx, and it will be touched around 120 crores for that.
Okay, so we don't expect to touch to 150 odd crores. It will be around 110, 120 odd crores, right?
Currently it seems difficult. 150 crores.
Okay. And if you can just share something on the employee cost, because last quarter it was around 19 odd crores. This quarter it is around 16 odd crores. So are we not ramping up the facility, adding new employees? What is the reason for lower employee cost?
Lower employees because some cost is related to our turnover basis. Okay. So our turnover has decreased by around 30% or kind of thing. So some labors and some, you can say, the lower production in our factory premises also. That's why the cost of the employee cost has gone down for this quarter.
Okay, contractual workers, maybe that is the reason for... Yeah. And sir, one more question. In last 8 quarters, we've not seen increase in our dealers, whereas our formulation sales has increased to, 64 odd crores. From 64 odd crores, we've reached now to almost double. So if you can just shell out what is the reason for no increase in the number of dealers, stagnant around 9,400 dealers.
No, 9,400 dealers was number of the FY22. We have not updated the number of current quarter. We will update in the, you can say, the year-ended numbers.
Okay, fair enough. I'll get back in the...
Currently, if you say the currently number, it will be more than 10,000 dealers.
It will be more than 10,000. Okay, that is what. Yeah. Thank you so much. I'll get back in the queue.
Thank you. The next question is on the line of Yogesh from Arihant Capital Markets Limited. Please go ahead.
Good afternoon, sir. Am I audible?
Yes, you are audible.
Yes. So, sir, my first question is, if we recall, Q1 and Q2 both were quite weak. Q1 was one of the worst quarter for us. And one of the main reason was the China lockdown. And Q3 has been even weaker. So just, it would be helpful if you can give some details on actually what is happening in China. Is there a demand issue or the ports are closed? So exactly what is happening in China because of which we are facing this problem?
So basically, if you see, the global macro situations are not good. In Q3, because majorly it's the Western countries where you have major business. But because of inflation, foreign exchange availability, and in China also, if you see, because of the COVID issues, there was a lot of lockdowns in Q3. So the demand issues are definitely there, and supply is sufficient to fulfill this kind of demand. That's why there's this price issues and all that have come into play. But we've not really reduced prices. That's why there's a dip in the turnover.
Okay, so there is no issue of logistics. Like last time, it was the Shanghai port was closed. So it's not about logistics. It's
there
about
are no port issues as such, but geographical, macroeconomic issue is not really good.
And sir, what is the current, like China reopened in the later half of December. So what is the current situation? Are we getting orders, request from that part?
Yeah, orders, we have started getting orders from China, but then because there are supply available in the market both in China as well as India, that's why the price expectation of our customers are lower. But once demand kicks in, things will stabilize. So for now, we are being very selective and not really reducing our prices. So initially, maybe it looks bad, but once the demand kicks in China, the prices will also stabilize, and things will start moving in a better way.
Sure, sir. And for the quarter, how was the domestic business? Like export is down, but how was the domestic business? Has it increased during the quarter, Q3?
Usually Q3 is not a domestic period, and because as I said, the global macroeconomic situations are low. That's why domestic requirements for export orders have also been low in this particular quarter. Have I answered your question?
Yes, sir. So, yes, sir. Just to understand a little more, so was like domestic business would be small, but it would be like what would be the trend like? It was.
Okay, so usually what happens is in quarter 3, the demand for herbicides are more in the domestic in India, and we are more strong in fungicide and insecticide portfolio. So what orders we usually get are exports and domestic orders which are for export requirements. So because your macroeconomics, global macroeconomics have not been good, that's why insecticide, fungicide requirements for our products have been low, and that's why the hit in the total turnover.
Sure, sir. And just coming.
Usually our products start moving in Q4, the insecticides and fungicide. Q3 is mainly a herbicide period.
Sure, sir. And just coming back to China, like Q4 is also a large quarter for China?
Yes. The COVID is still a concern even now in China. The situation is not really normalized in China, and now there is a festival. After the festival, it is hopeful that the situation will improve in China. The fourth quarter, as far as China is concerned, it should be better than the third quarter. But normally, third and fourth is the main export market, especially for China. China is a global production hub. The Chinese buy from India also our range of products and distribute to the global requirements like Africa and all. But now fourth quarter should be much better than the third quarter.
Sure, sir. So just to understand on the demand side, like if I take approximately like about 50% revenues come from domestic approximately, and then the rest 20% odd comes from China. So about 70% is contributed by 2 countries. So if we are seeing some pricing pressure in China and some demand issue as well, so what would be the outlook on China? Will this grow in FY24? How do we see this forward?
Can you reframe the question? Grow as in?
So what I meant is like if there are some challenges in China because of COVID and others like pricing challenges and demand issues, what is the outlook for the China business? Do we see it growing in line with what we see, like 18 to 20% growth? do we see that going forward in FY24?
Yeah, that will happen because our new facilities will be coming in. When it comes to China also, usually our line of products start moving in Q4 in China in a big way. And the Chinese government have already taken a call to open up the entire economy, even though they have these COVID issues, because lockdown was really not supporting them. So we will start seeing demand coming in from now, because today is a Chinese New Year. So they had been on holiday for almost 15-20 days, and they should be opening up in February.
Sure, sir. And regarding my next question is on the capex. So regarding the Sarigam capex phase 1, which we are targeting March end. So are we on track to complete it by March end, phase 1?
Yes, we are on track for this capex plan that we have given. Our facility will be coming up, and the products that we will bring in would not be purely from China perspective. That distributed both in India as well as other than China geography. So then this will also diversify our geographical risk that we have, and also our product portfolio will become better.
And sir, by when can we ramp up this phase 1 to optimum capacity? How many months?
It should be 1 to 2 quarters. It should be ramped up to sufficient capacities.
So I am assuming that this is technical. So the optimum capacity utilization would be about 70-80% in 6 months.
Yeah, we can say 70%. Next financial year.
Sure. 70% by September, right? September 23, right?
Yeah, we are hopeful by September it should be at 65-70%.
And sir, have you got the product registration for these molecules coming up at Sarigam?
Yeah, we have registrations for few of them, and for the other 2 molecules, we'll be starting slow. Yeah, we'll be starting slow, but slowly as we get registration, we'll increase the capacities.
Applied and it is lined up.
Yes. So sir, what I understand is like we will start with 2 molecules and 3 molecules will come in phase 2.
3 molecules we'll try and bring in the phase 1 only.
Okay, and the other 2 will come in phase 2, which will start after October 23.
Yeah.
And sir, one question on the growth expectation we have. So like FY23 was challenging, and we have a long-term revenue growth of 18 to 20% on revenue. So will there be any pent-up revenue growth, because 23 was down? So are we in line with this 18 to 20% revenue growth in FY24?
Yeah, we will be in line of 18 to 20% in FY24. This year has been tough, and that's why otherwise in a usual year we would have been able to achieve as we had projected at 18 to 20% even this year. But things have not been good. That's why we may match the last year's turnover this year.
So just coming back to the guidance, it's like 18 to 20% is our long-term expectation. But since FY23 was weak, would there be any pent-up demand? So can we exceed the 20% guidance next year? Maybe like 23, 24%, because 23, there was this problem with lockdown in China.
Currently, we are very conservative in that. Okay, so we estimated it will be around 1450 we are targeting for FY23 and 1850 we are targeting for FY24. This is all our ballpark numbers of that.
Okay, so FY24 would be like 18 to 20 and 23 is like 15 to 18.
Right.
And margins would be similar FY24, like between 18 to 20% operating margins.
Yes.
And lastly, on the cash flow, sir. So, are we positive on cash flow from operations at the end of 9 months?
Not now. For the FY first half, it was positive. For this quarter, it's almost around, you can say, minus to around 5 to 10 crores.
And we hope to get back to positive territory by end of the financial year.
We cross our fingers. We are targeting our cash flow positive for this financial year, but it seems to be it will be a neutral around -5 or +5 in the range.
And sir, the last question on the planned capex at Saika. So, when are we looking to start our next stage of capex in Saika?
We are targeting by FY24 end.
Okay, and this will be herbicide, totally herbicide.
Yes.
Okay. Okay. Thank you, sir. That's all from my side. Thank you.
Thank you so much.
Thank you. The next question is from the line of Niharika from Equitas Investments. Please go ahead.
Hello. Hi. Thank you for the opportunity. So my first question would be on the inventory side. So how much days of inventory do we hold as on December?
Currently, inventory is around 110 days, madam. 110 days.
And this is higher price inventory, or like have we taken any write-offs in Q3 regarding
Madam, because we are inventory as a carrying out the policies of the market value or the cost, whichever is less. So it's almost, you can say, the market value is exactly that.
So we have not taken any write-offs in inventory considering the...
No write-off.
And secondly, I want to understand on the, so you are saying that there has been macroeconomic factors and that is why our performance is not as good. So what exactly do you feel that these all things would fall in place next year and our demand can come back? Because I understand one portion is China, say 20% of our sales, but rest of 80% is dependent on India, probably US and a bit of Europe. So what things do you feel would fall in place that do you see demand coming back?
Madam, currently you can say that our domestic business has grown. Our domestic business has grown by 4% for the period of 9 months, and our export revenue degrowth by 12% for the 9 months. In that, the major contribution is the China-related issues for that, because the COVID issues was exceptional year for FY23. So we don't expect it will be continued for FY24 also. So will be continuous with the pent-up demand of the China will also come in the next year. And the other geography we are entering with our new plant capacity and new registrations also. So we are track on that we will be achieve around 18 to 20% growth from FY24 by FY23.
New plants will have a different product portfolio. And we have got a lot of new registrations in India as well as to other countries. We will be targeting these new products in these new geographies. And that's how we feel that this 80 to 20% should be achievable.
Okay. And also, there were some steel companies whose results are already out for this quarter, and their agrochem division didn't perform as poor as ours in a way. So what do you think? Are we losing our market share in domestic? Because seeing the presentation, I could see that our domestic demand has fallen drastically quarter on quarter. Export hasn't fallen quarter on quarter that much, but I think domestic demand I can see has fallen down. So what do you think might be the major reason for that, and why do you think our peers have performed a bit better? Are we like losing market share to them?
Well, domestic business we have two aspects. One is the formulation and one is the technical business, you say. Okay. So formulation business has grown by around 25 to 30% in that. But our technical business, which subsequently is to be exports in that. Okay, it has grown by degrowth by around 15%. So for our branded formulation, our definitely market share has increased in that.
Also, product profile company to company is different. So it is not necessary we've lost market share. It is possible that they are in a different product, they deal in different products where the issue may not be that grave as our product that we deal with. They may be doing business more into herbicides also, and we are into insecticides and fungicides.
Okay, yeah, fair enough. Also, I want to understand on the Sarigam side that what kind of top line are we like? Can we achieve maximum revenue potential from Sarigam in phase 1 and phase 2?
Should be around 2.5 to 3 times our investment.
Okay. And when do we plan to achieve it? I understand that you will be planning to ramp it up in phases. So this 2.5x would be possible, say, in FY25-24 end?
Yeah. We'll consider for optimum revenue, we'll consider FY25. We are being conservative.
Okay. And my last question would be on the capacity utilization side. So what kind of capacity utilization did we see in this quarter?
Capacity utilization in our existing facility?
Yes, existing facility.
Existing facility in our technical plants, it's at 90%. Almost 90. You can say 85 to 90. And in formulations, it's around 55, 60%.
Okay. And now that we are in quarter 4 of this financial year, do you see any demand coming back? Like, because you said that quarter 4 demand should be better in domestic. So what kind of scenario are you facing currently?
We feel this usually our Q4 is usually better than Q3. So we see that as China has also opened up, the government has opened up Chinese economy. We see that demand from China will come in Q4.
Okay. Okay, that was it from my side.
Thank you so much.
Thank you. The next question is on the line of Chintan from Prudent Corporate. Please go ahead.
Sir, can you say that this is the only one-off kind of quarter?
Chintan, sir, there's a lot of disturbance from your line.
Okay. I will get back in the queue. There is some problem from me.
Thank you, sir. We'll move on to the next question. That is on the line of Bhavya Gandhi from Dalal & Broacha Stock Broking. Please go ahead.
Yeah, thank you for the opportunity. So just wanted to understand how many products are there in the pipeline. So 5 that you mentioned, phase 1, phase 2 that we are aware of, and then post that, how many products are there in the pipeline?
We are evaluating around 10 to 12 products for Sarigam. It's a multi-purpose facility, and we have got many registrations in India, which is available in the public domain also, and few registrations we've got in other countries like in the West, as well as a few in the Middle East and Africa. So based on that, we will be bringing in new molecules. Some may be a dedicated facility, and some on multi-purpose facility based on some campaign.
Okay. And in the first year, from April onwards, in the first year, how much revenue can we expect from Sarigam? 2.5, 3x is FY25, but in the first year, can we expect at least 1.5x of revenue of the investment that we are doing?
We'll be able to achieve.
Yeah, that is easy.
Not really calculated like that, but we should be able to achieve 1 to 1.5x.
Okay. And with respect to our domestic technicals, because I see it's almost at 50 odd crores versus on a sequential basis it was at 122 odd crores. So barring the supply issue, is there any competition intensity which is increased? Because that's a major fall, because if we take it on a YOY basis also from 106 crores it's down to 50 odd crores. Domestic technicals, I am saying.
Last year, if you see, there was power issue. There was a big your final product price rise, which we had seen in Q3 last year because of the China issue. So we saw a very good quarter in Q3 last year. So this year, it is exactly opposite. It is not usual. It is a really unusual year. So you've seen two cycles from last quarter to this quarter. Last year, this quarter to this year, this quarter.
Okay. And do we maintain the annual revenue guidance that we had? Because that seems unachievable with this quarter results. So
we've already said that we will be matching last year's turnover.
Okay.
And next year we have projected at 1850.
Okay. And with respect to so if you can just quantify the number of registrations that we had 1 quarter back and now that we have.
We don't have that figure now, but we can get back on.
Okay. Any approx figure will also do. How many registrations that, number of increased registrations that you've got in this quarter? Maybe that also helps.
It'll be around 30.
30 new registrations in this quarter?
Yeah, it would be mix of both formulation as well as technicals. In domestic also, we've got good registrations of technicals.
Okay. Okay. And can you just share the role of Ajit Gujral that we've hired and brought him on board?
Yeah, he'll be looking into our marketing domestic. Domestic both brands as well as B2B.
Okay. And on the technical R&D front, does he have any competence or how is it like? Or only in terms of marketing he's going to look after?
Mainly, he's mainly for marketing. He is not a R&D person, but yes, his views on patents as well, patents as such, has been really good in the past, which we consider as part of marketing itself.
Okay.
So based on his views, based on his suggestions, we can take up new high-value products we can select for which is required in the coming years in the brand as well as B2B segment.
Right. And going forward, are we looking at more 9(3) products versus 9(4)? Is that the thought process?
There will be 9(3) formulations going forward, yes.
Okay.
We will be pitching for more because we've got a lot of technical registrations in the last 1 year, and we have already filed for many which we may see in the next 6 to 8 months. So based on those molecules, we would be filing for some formulation 9(3) registrations as well in our B2B, and we may give it in our B2C, and we may give those molecules in B2B also.
Okay. And in terms of pricing, have we seen realizations drop drastically, or is it only the demand which has led to poor revenue?
Both. Even prices have come down.
Okay, prices have also come down. Is it possible, to quantify at least the top 3-4 molecules that we have this on price erosion, or how is it?
Across products.
It's across the
quarter to quarter there has been price erosion, but if you see last year Q3 to this year Q3, there has been a big fall.
Okay. And possible to share the split between herbicides, insecticides, and fungicides? How much revenue does it contribute?
Around 70% is 70-75% is insecticides, and rest around 20% is fungicide, 5% may be herbicide. The equation will change in the coming years because the Cyca site will be dedicated to herbicide. Yeah.
Okay, and that would be metribuzin?
Fungicides coming in. Pardon?
Okay. That would be metribuzin, or which one would it be? Is it possible to disclose?
Few other molecules also which will come in Cyca, not just metribuzin.
Okay, fair enough. I'll get back in the queue. Thank you so much. Yeah.
Thank you.
Thank you. The next question is from the line of Vicky Wagwani from Yes Securities. Please go ahead.
So thank you for the opportunity. Am I audible?
Yes.
So there is 30% YOY drop in our turnover in this quarter. If you could quantify between how much is fall due to price and what is the impact of volume decline?
Both way it has impact.
If you could give a ballpark.
We'll have to work that out as well. But there has been price as well as volume decline this quarter.
Okay. Sir, and we have seen the sale of
Hello?
Sorry to interrupt, sir. The line for the current participant has dropped. We'll move on to the next question. That is on the line of Imran from Longbow India Capital. Please go ahead.
Hi, thanks for the opportunity. I believe I am audible.
Yeah, you are audible.
Okay. Sir, just one question. If you can, tell us whether, out of these 3 months, last 3 months, October, November, December, which one was the worst?
December was the month which we got lowest turnover in December.
Okay. And October and November were normal compared to last year same time?
No, not to compare, not to say. It will be given around 5 to 7% degrowth in October, November.
As we mentioned, last year Q3 there was a big jump in the prices because of China power issues.
Mm-hmm.
So last year to this year, anyways, we've been seeing a fall value-wise sales figure in October as well as November, but December has been very poor.
Okay, so that means you kind of knew that this is not doing that well in this quarter. October and November was not that good. Now my question is, then if you already knew this, then why did you given a guidance of 15-17% growth? You will continue for this year when you were doing the Concall last time in November. Hello?
Hello?
Yeah. Is my question, am I audible? You heard my question or shall I repeat?
No, your question was not audible. Now we are able to hear you.
Okay, so let me repeat my question. I was asking if you knew that October is down 5-7% and November is also looking very similar, then why did you guided in the last con call for about 15-17% growth?
See, normally this third quarter and fourth quarter is going to, in the past trend, it used to be better for many years. So all of a sudden the situation has changed mainly because of the COVID also, which was unpredictable.
Okay, so you didn't know about it till your last con call.
One thing is we had already guided lower to 15 to 17% revenue growth in this year in Q2 con call, and that was from an H1 point of view. We had not considered that from Q3 to Q3 basis. We had considered based on what we were seeing in the month of October that sales were not up to the mark, but things would be better because there were discussion of things improving and all. So we said that we would be maintaining anywhere around 15 to 17%. Even in our last con call, we had guided lower our projections.
Right. And given whatever data you have as of now for this month, based on that, I'm assuming you're claiming to match last year's revenue. You'll do more revenue basically in Q4 so that you will match last year's revenue, right?
Correct.
Okay. Thank you.
Thank you. The next question is on the line of Rajesh Jain from NB Investments. Please go ahead.
Sir, my first question is, what are the reasons for the drop in margin? Because there is no inventory loss the CFO had mentioned. Then what are the reasons for the drop in margins?
Basically, the margins will consist of 2-3 reasons. First is the raw material cost has gone up in that. Okay, and we are not able to entirely pass on to the customer due to the FG prices not in our control is also. And second one reason is our inflationary factor in that. Our fuel and the power cost has been rising by around 20 to 30% in that. These are the two major reasons for the dropping of margin.
Okay. So did you say raw material prices have gone up?
Yes, raw material prices has gone up.
Gone up as in it had gone up, but for our set of products, it has not come down.
So you are still not able to pass on the increase in raw material prices to your customer. That is what you are saying.
Yes, yes. Because our geographical, your macroeconomic situations are not good. Demand is really not coming in. China was under lockdown, and China already the factories have inventory in place. So globally, people are expecting prices to.
Sorry to interrupt, sir. Your audio is breaking up.
Am I audible?
Sir, it's still breaking up. I'm so sorry.
Now is it audible?
Sir, slightly better. Please proceed.
Okay. So issues of macro situation has been done. There has been lockdown in China. Domestic season usually in Q3 is also done. So overall things, because of lower demand and ample supply, the prices also, expectation of customers were down. So prices, we had to give in lower prices to our customers. The RM prices were on the higher side, which did not come down. So overall, we had to face some margin issues.
Okay. Now that you have given for the full year flat revenue growth.
We tried to hold on to the price. Sorry. Initially, we tried to hold on to the price.
Okay.
As was already mentioned by our CFO, that December had been bad. But we held on for as long as we could, but things did not look good. Even by mid of November, then we had to take a call.
Okay. Sir, now for the full financial year, you have said that you would try to reach last year, revenue figures. How it would look in the bottom line? Will you able to reach last year profit, or will it be lesser than that? Hello?
Members of the management team, are you able to hear us?
No, we are not able to hear that.
Sir, are you able to hear us now?
Yeah, now it's on.
So what we'll do is we'll just disconnect your line and reconnect you all.
Continue. We can give it a try.
Okay.
Now it's audible. Clear.
Mr. Gandhi, may you proceed with your question? Mr. Gandhi, may we request you to proceed with your question?
Yeah. Hello. Am I audible?
Yeah.
Yeah. I wanted to understand the geographical breakup. In terms of our sales to China, what would it be as a percentage of revenue in this quarter and a quarter back?
China now and last.
So your voice is not audible.
Geographical breakup we don't have at present. We'll have to work it out.
Any broad understanding also will do, at least.
We'll give this particular information off instead of giving you some broad idea.
Right. Okay. And in terms of our overall exports, I think Middle East contributes the major. If you cannot at least quantify, but in terms of overview, if you can just mention.
Asia gives the main in
Your voice is not audible, sir. It's cracking a bit.
Sorry to interrupt, sir. Sir, your audio is breaking up.
Okay. We can fix it.
So we'll just disconnect your line and reconnect you all. Ladies and gentlemen, please stay connected while we reconnect the management team. Ladies and gentlemen, this is the conference operator. We request you to stay connected while we reconnect the management team. Ladies and gentlemen, thank you for patiently holding. We now have the line for the management reconnected. Over to you, sir.
Yeah. I just wanted to know the geographical breakup. We were discussing about, is Middle East a major portion of our exports, or how is it? If you could just rank it amongst different geographies, that will also help.
Yeah. As a rank, if you have to say, excluding India also, Asia Pacific is the number one geography, followed by Africa and then Middle East.
And then Middle East. Okay. And in terms of depreciation, is it possible to quantify how much would be the first year depreciation charge as a percentage of incremental capex?
It will be around, you can say, because the proportional on the side, it will not be more than 2 to 5 crore rupees in that.
2 to 5 crores roughly. Okay. And in terms of our employee cost, how much would it be fixed and how much would it be variable? Say, if you can quantify that.
It will be, say, around 75-25 in the range.
75-25.
25%.
Okay, thank you so much. I'll get back in the queue.
Thank you. The next question is from the line of Vicky Wagwani from Yes Securities. Please go ahead.
Yeah, thank you again for the opportunity. So my question was, I have seen peers also the sale of insecticide has been impacted in this quarter. Any specific reason for the same?
The same. It is usually in domestic. It is not an insecticide period, and macro situation globally has not been good.
On YOY basis, if we compare for Q3 last year, the sale of insecticide has come down. So maybe inventory is more into a channel, or what? Any specific reason?
Yeah, you can say inventory is more because demand is really not picked. And production did not go down because everyone expected that demand will come in sooner or later, but that did not happen.
And so secondly, if you could give prices on YOY basis for top 3 molecules, maybe for cypermethrin, beta-cypermethrin, if you could give what was the price in last year Q3 and then this year, so that we can compare on YOY basis.
We'll have to look into it what exactly the price was last year, but there should be around 10% dip as compared to last year to this year.
Okay.
10 to 12% dip for sure.
On average basis?
Average basis.
Okay. Yeah. Thank you.
Thank you. The next question is on the line of Yogesh from Arihant Capital Markets Limited. Please go ahead.
Thank you, sir, for the follow-up. My first question is regarding the US business. So we are targeting about $25 million in the US business. So what would be the timeline like? By when can we expect this?
2 to 3 years.
So by FY25, we'll be able to target $25 million? Should be. And sir, how many products are registered in the US for us?
US for now two products. Recently we got one more product registration in US, and hopefully by end of financial year one more we should be getting, or maybe Q1 next year.
Sure, sir. So just wanted to understand, and if you can share some more details. What I understand is currently we have about 25 crores of revenues coming from US, and if we take a 2-year horizon, $25 million, if I take exchange rate of $80, like 200 crores in about 2 years from 25 crores. So will this 2 to 3 yeah 3 years. So will this around 4 products we have, will this be sufficient for us to ramp up to around 200 crores in 3 years?
No, we are planning more products. We have already applied for a few more products. So total, I think around 6 to 7 products basket we will be making in US. And depending on how we get the registrations, this figure would be we would be able to achieve.
Okay, sir. And sir, this will be all herbicides, the 6 to 7 products which we are looking at?
No, it will be mix of all three.
Okay, but the major composition would be herbicides?
No, it will be insecticides and herbicides.
Sure, sir. And sir,
more insecticides is applied.
Yes, sir. And sir, any plans for us to register products in the Latin market going forward?
Yeah, we have also started activity in Latin market. We already sell in the Latin American countries, but we plan to increase turnover even in Latin market, and we have already filed for some registrations also, but it takes longer in Latin.
Sure, sir. So we already have products registered. Yes, sir. So just to understand, like we already have products registered in the Brazilian market?
Yeah, we have products as a source addition in Brazilian market.
Okay, and this will be like which category, like insecticide, herbicide, which type of?
All insecticides.
Yes, sir. And sir, what would be our total capacity for deltamethrin?
Deltamethrin total capacity should around 300 tons per annum.
And this will be mainly export oriented?
Yeah, mainly export.
Yes, sir. And sir, last question on the quarter. If we see at the effective tax rate, there has been a big decline, both quarter and YY basis. It seems to come from some deferred tax related assets. So if you can share some details on that.
The tax rate will be in the range of 24 to 25%, sir. Because over the next year, next quarter, the new plant will be started, and we get a depreciation benefit for that also. So it will be range around 24 to 25% in that.
Okay, 24-25% going forward in FY24.
Right.
And sir, just to come back to the third quarter, it was around 21%, the effective tax rate, 21.5. So if you can share some details, what led to the decline in effective tax rate?
Because tax rate we are calculating on the annualized basis. So this was the exceptional quarter, and the profit decline is too much in that. That's why tax rate is, you can say, the quarter to quarter impact also.
Okay, sir. Thank you, sir, for answering the question. That's all from my side. Thank you.
Thank you. The next question is from the line of Rajesh Jain from NB Investments. Please go ahead.
Sir, my call got disconnected when I was asking my last question. It's regarding, you have given a guidance for the top line, which will be flat compared to last year. So what would be the same guidance for the bottom profit, net profit?
The EBITDA margin will be around 18 to 20%.
No, sir, for FY23 I'm asking, for the complete year.
The EBITDA margin will be around 12 to 14%.
Okay. My second question is, now the Sarigam facility phase 1 would commission by the end of this quarter?
End of this quarter.
Yes, okay. Now, second is about the registrations. You had told us last time in the call that a few customers from Europe and US would be visiting our plants. So all those visits and everything is gone successfully?
Yeah, it's an ongoing process.
Okay.
So we had European visit, US is pending. So but it is continuous process where customers from different geographies now, as everything is opened up, have started moving and evaluating facilities also. So we also had a Brazilian company audit our facility recently.
Okay. Now, why I was asking is, you had mentioned last time that, US we may do around 50 crores next year. And now to the previous person, you mentioned around, 200 crores in the next 3 years. So the registration and all that, the marketing setup, all those are on track?
Yeah. So we have taken a goal of 25 million, and we've already started working for that goal.
Okay.
So next year we should be able to meet 50 crores. And also we've put in few registrations. If everything goes well, we would be able to achieve this figure as well.
Okay. Okay. Thank you very much and all the best.
Thank you so much.
Thank you. The next question is from the line of Taha Ansari, an individual investor. Please go ahead.
Hello, sir. Thanks for the opportunity. So my first question is, what is our R&D expense in terms of our revenues as of financial year 23, as well as what R&D expenses to revenues we see going forward? And what is the current size of our R&D team, sir?
Well, currently R&D expenditure is around 1% for that, and going forward it will be around 1 to 2% in the range of that.
Okay, good, sir.
It is around 25%.
Okay, sir. So my next question is, 3 years back, our MD Raghu sir given an interview in which he has mentioned that soon company will come up with biopesticides. Can you please update us on that?
So for now, it is yet under planning stage only. We have looked into few molecules in the biopesticide segment also, but maybe we'll take it up for marketing first and not production.
Okay, so
it is definitely a good segment to. It's a good segment to look into. But for now, we've not yet seriously entered into manufacturing or seriously thought of manufacturing such biopesticides.
Okay. So it will not take place in, let's say, near future.
Pardon?
It will not take place in near future, sir. I think so.
No, at least not in the next 1 year.
Okay, fine. Sir, in next question is, in 2020, government proposed to ban 27 pesticides, although ban not implemented yet. If in future this get implemented, then our 2 products, acephate and deltamethrin, are going to be banned on that. Please, if you can tell the revenue share company gets from acephate and deltamethrin, and is the company ready to protect its revenue if these 2 products get banned?
So already we've been told that deltamethrin is not going to be considered in this list, as it's a safe molecule used in public health as well as agriculture. Secondly, deltamethrin in agriculture also in India, it's not a very big product. It's mainly an export product. So coming to the second molecule, acephate is not a very big molecule for us today, and we will be able to shift our sales to another product if acephate tomorrow gets banned.
Okay. So, sir, if you can please share the revenue in terms of acephate and deltamethrin.
Acephate is negligible. Delta definitely is a big molecule for us, but the ban also is only for domestic, which they have mentioned,
okay,
and not exports.
Okay, sir,
So
but if
that would be very small.
Okay, fine. Okay, fine. I think deltamethrin is 8 to 9% of our revenues.
Yeah.
Yeah, but it won't be banned.
It is
only a data submission. It is submitted and it won't happen.
Won't happen. It's already mentioned that data required by the government has already been submitted and should be okay.
Okay, fine, sir. So next question is, as of my knowledge, our glyphosate product is fully or partially banned in 160 plus countries, as well as recently India has implemented several restrictions on the usage of glyphosate. Sir, if you can share the revenue percentage company generates from glyphosate side, and what's your opinion for the future of glyphosate?
It's not a very important product for us.
Yeah.
And it is not banned. It's only partially for a few months it is banned. But for us it is a negligible turnover, and there is enough alternate products even if it is some restriction.
Okay, so there will be no serious setback if this thing happens.
Less than 1% of our sales.
Okay, fine. So next question is, one of our competitor on pyrethroid side is adding capacities in cyflothrin and beta-cyflothrin, and were mentioning cypermethrin and permethrin as an old product in the industry. So what's your opinion on that side? And are we also working on these updated products?
Only his opinion, otherwise it is not, it is a very well accepted product worldwide.
We are also working on these molecules.
So cyflothrin and beta-cyflothrin
have very good efficacy on field level as well as very well accepted in public health segment also.
Okay.
Even if it's a product, we can also produce that.
Okay, so fine. Okay, sir. That is all from my side, sir. Thank you so much.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to the management for the closing comments.
Yeah, thank you very much for showing interest and joining even in Saturdays. I appreciate. And if there is any further query, or we can our EY and I will reply for any further queries. Thank you so much for your interest.
Thank you. Ladies and gentlemen, on behalf of Emkay Global Financial Services, that concludes this conference call. We thank you for joining us, and you may now disconnect your lines. Thank you.